They loved it.
Nice.
And then yesterday I was looking for my scissors in my office, and I went into my 9-year-old daughter's office, and I opened her top right-hand desk drawer and found 9 wrappers.
Oh, that's amazing.
So we might have a problem here, Watson. We need to come out with those half-size bars faster than I thought. Or I need to put a lock on my office door so my daughter doesn't steal them. Anyway, let's good morning everybody. Let's retweet and whatnot. So yeah, you were gone for what, 2 weeks, Ben?
Yeah, I was in St. Bart's for a week. Working.
Yep.
And,
working at
honestly,
with Hugh Henry.
Yeah.
Oh yeah, how did that go?
And the Wild Man, David Levinson, and Darius was there.
And Darius, a friend of the show,
Green was there.
Yeah, there was a lot. It was good. It was a really good conference. It was a lot of fun, and we got really good weather. Well, the first day we were delayed. He didn't get there because of the hurricane, but yeah, it was good. And then I was in Wisconsin. I had a cousin's wedding, so my niece was getting bigger by the day, so it was quite nice. And now I'm really ready to be working all the time. Like, it was too much.
Yeah, it's tough being on the road that long.
It is. And August is the time to do it if you're going to do it.
That's true.
We walked in yesterday and everything was down except for precious metals, vol, and in the dollar, and then just right back. What a rally since 1:00 yesterday, huh?
Yeah, I think somebody had some inside information on the Apple Google news because those calls were heavily bought yesterday afternoon.
Yeah.
Which I'm sure
that was a move.
Yeah, it's still a move. Having that move holding in Google is wow.
Where is it right now?
Last I looked, it was up 8%.
Yeah, 8.8.
What a move!
Yep, pretty.
You know what I looked at yesterday? I've been doing some work on Meta and this whole a lot on Meta lately, and I was like, what you could do is you could go long Google for Meta, and then I looked on the screen, I was like, God damn it! Steve, I think you're muted.
Yeah, I muted. My dog was barking at
the
garbage man. Okay. Cool. Yeah, the Google Meta. What was I gonna? Oh, and the the rates move last night in Japan was interesting. Did you see the 20-year and the 30-year? The long end was all-time, well, not all-time highs, but the highest since 1999.
Yeah, gold all-time high.
They're getting spooked. Gold all-time high. Yep. All right, boys, you ready to get this show on the road?
Sure thing.
Clear throat. Good morning, everybody. Welcome to Wall Street Beats. I'm Steve Lamar. I'm joined with our macro expert here, Benjamin Brey, and our healthcare expert, David Maris. It is September 3rd, and everyone is back to work and in their offices or home offices and strapped in and ready to go after yesterday's big move down and subsequent rally yesterday afternoon and this morning. So what are we thinking about today, Mr. Brey? What are you looking at? What have you been looking at? I know you were looking at Meta. You were looking at French banks going down. That looked like it was probably a good trade over the last
that was
3 or 4 days.
Yeah, that went down 5%. But I don't know. We can talk about Alibaba.
That's another one.
Bought Alibaba in July, and they printed last Friday, and they had a pretty good print. Their cloud business is really ramped up. And there's this anti-involution thing going on in China, which is kind of like, hey, let's curb in all the excess capacity price war stuff. And I think that's really one of the things that's driving a little bit of this Chinese tech consumer-oriented rally. And it's interesting because if you guys remember, in 2024 January, I came on the show, or whenever we started this Wall Street Beats, like March. I started getting involved in January, but I started talking it on here on the Q2 about.
That's when everybody hated China.
Yeah, I mean, Berno was embarrassed that I was even pitching it.
I remember. And
Uninvest.
so was
It was
Herb.
one of
Herb
those.
didn't know what to do with that.
It was one of those uninvestable situations. And usually, when
Yeah.
people say something's uninvestable, I tend to think it's very investable. If it's
Exactly.
a real asset and stuff. Anyway, so last year I kind of liked BYD and Xiaomi the best. Like, Baba was cheap, but the average American portfolio manager or guys, like, they just knew Baba because it's been around for 10 years, and they knew JD and Baidu and blah blah blah. Well,
Yep.
I thought they were cheap and they were okay trades, but the industrial ones were really good. And then, I don't know, in the spring or something, I kind of changed my mind. I got out of all that stuff. And then this year, I haven't been involved in the BYD. There's a huge overcapacity situation in China with these EVs. I don't know how much you guys have paid attention, but like, they got it down to like $8,000 for an EV. I mean,
Yeah.
I think in the United States you can buy like a road bike for $8,000. I mean,
Exactly. I've seen scooters nearly that much too.
right. And so with the whole trade tariff, situation going on, China needs people to sell to, and there's, I just don't think you can replace the biggest buyer in the world if you're going to try and like go elsewhere. And so I don't know. So BYD was down 8% on Monday. They had a print that was just kind of like, overcapacity, price war, not great. But then Baba, was up 18%. Right. So I got involved in Baba again at like 108 in early July, and it's, I don't know, I think 136, 137 now. But I think it's one of those things where if we look around the markets, S&P is close to the all-time high. Europe's close to the all-time high. Japan's close to the all-time high. So when we think about where you can go if you're looking to have exposure to something that's, trailed or might be a leader in a new regime, China could be one of those places. David's sector, the XLK, I bought that and nobody would endorse it. Nobody. I was like, it was the lowest relative to the S&P on August 7th.
XLV.
XLV. I don't know anything about healthcare. I literally just was like, hey, it's the lowest on a relative basis to S&P, and then it went up 7% in a week or so, and I think that's kind of underowned. And if the economy is going to get a little dicey, more stable cash flows. I mean, that UNH move probably was what drove a lot of that. But I don't want to get too much into that. I'm just saying, oil and gas, healthcare, and China are areas you can go. And I don't know. I'm involved with a ByteDance. We're trying to source some shares of that before the IPO, and that's 6 times EBITDA right here at what we can source it at roughly. And Baba's like 8 to 9 times EBITDA, depending on your number. Baidu is 1.5 times EBITDA, 1.5. So if you go to 2, it's a 30% move, right? So versus Meta's 19 times, like the China tech versus U.S. tech, there's a very big valuation disparity. And I'm not saying that like they should trade equal, but it just seems really wide. And I think that they're probably gonna be found to be much closer to each other than the perception of the average Western. So I like Baba, and I like if I can get these shares, I like the ByteDance, and I bought some Baidu, not a ton of growth, but again, 1.5 times EBITDA is 1.5 times EBITDA. So yeah, I'm kind of warming back up to China basically.
So Baba, after a 19% move, I assume you at least took some of those calls off the table.
It was a few legs to the trade, but I still have the 125, 150s, like in pocket right now, and a little bit of stock.
Okay. All right. So you're, even after 19%, you're still an owner, still holding on to this.
Yeah. I mean, I think it's just going to probably go to like 150. So,
okay.
I mean, we'll see, like if you're gonna be like in a name that starts, like, look at Rocket, right? Like you get like it going, but there's like little fits and starts along the way as you keep going on a trend. Like, people who are early in something are going to be source of supply, like you apparently, like, hey, I'll sell it. But my
yeah. Yeah, 19% move for me. I'm taking some off.
So I'm just saying that, like, you sometimes give a couple dollars back here, a little back if you want to ride the trade. And when I did the 115 August calls, I took those off when it went from 108 to 125 fast. I didn't have as much time on those, so I did do that. But anyway, that's it. I like Baba. I think that the China in general is interesting and could get more flows. I'm working on this meta thing. I will talk more about that when I have that.
Yeah, I was going to ask, are you ready to share any of your work?
No, I'll talk about that maybe next week.
Okay. All right. So far, I've seen some good work there, so I'm anxious to hear the final outcome. All right, Mr. Maris, what's on your mind?
So a few things.
Failing at replacing an oven.
Yeah. So the oven's operational. So my part of it's done. I'll get
so you
yelled
might want
at.
to share with the viewers that you can't replace a double oven with a single oven. You got to replace both at once, even if one of them is operational.
Yeah, I was today years old when I found out that if you have a double oven and one goes bad, guess what? You're buying a new oven.
You're buying both.
Yeah,
really? That's terrible.
Yeah.
Why would you just have one oven then?
They should be modular, right? But and maybe someone has that, maybe, but not Wolf. So there you go.
I guess because you could bake different temperatures. I mean, I don't really understand what is the point of a double oven.
Double oven is in case, like, let's think for Thanksgiving.
In case you host Thanksgiving, you need two ovens, right?
Yeah, you have a turkey in one and bread in the other, or something like that. And
there's just a massive temperature differential of where you put those. I guess it's like.
Yes,
you can see how domestic I am.
Ben
Sorry,
clearly
I'm
doesn't
myself.
Ben is clearly an Uber Eats guy.
Ben has a double microwave.
I have people cook for me, unfortunately.
Okay.
Yeah, call my mother.
Ben has a chef.
Someone with the flex. Okay, well, listen, the 99%.
He's out flexing your wolf flex.
Sorry, go ahead. David,
sorry, we've gone way off the.
All right, so a few things. So first on hymns, which I know everybody's always interested in hymns. So the chat of the Hymns House chat page is, and also on X, is off the hook, if that's still a phrase. It's like going crazy on this idea that they're just about to announce peptides and compounded testosterone and other hormone replacement. And I talked about this before, that I think that testosterone alone could be $1 billion for them, or upper hundreds of millions of dollars. And I gave the calculation for that, and it could be really meaningful. And Steve had asked just a couple of weeks ago, listen, are you buying it yet? It's down a lot. And I said, well, I want it under 40. And just like Lily on 700, it hovers right around 41, 42. And then a day like today, it's up 8%. Now that's kind of abnormally normal for hymns to be up so much on any given day for news. I think there's a lot of folks that think this is going to be big, and this is a new thing for them, and a new vertical, and it's going to be successful. I think it will be successful. I'm still not there. I'm going to wait till my under 40. I'm concerned about the overall market, as I think a lot of people are right now. But I also think that let's see what gets announced. One of the things, there's a lot of rumors about what will be announced, and some screenshots of web pages that may or may not be AI generated. I don't know. So I'm not going to get ahead of the news. Let's see what the news is. I still own a little bit, so I'm okay with my small position. And under 40, I think you get the upside for the new things, but you have a lot of execution risk. This is like, you have to not just
big new thing. Yeah.
Announcing things is easy. Selling them is hard. So, I still like it. I still think that they are doing something important for medicine, but I'm not there yet on hand over fist on the stock. There is a stock that I mentioned the other day, Amphastar, AMPH, which I bought a lot of pre-market. If you remember that story, they had a new drug approval for iron sucrose, they're a generic drug maker. And for a small company, this is a relatively small company, this is a pretty big thing. The stock went up from, I want to say I'm doing it from memory, like $21 to $30. And it stayed above 30 for the last while. And I said I'd revisit it at 35. Last night, I had heard from a friend of mine that another competitor was approved at the same time as Amphastar. Now, at the time, I knew that there was at least one. Now there appears to be two. So this morning, I sold a little bit of it just on the idea that if you have a 40% move in a stock that you bought
in that short a period of time, exactly.
Yeah, so why not take some off the table, see how the market digests this news? Maybe everyone already knows it. They're presenting at a conference today, and I'm sure they'll get questions about it. So I can always buy it back tomorrow. It's not the market's going to be open. So, but I just did want to pass along that news of how I'm trading it. And it's liquid enough that I could have just sold everything and gone short and said, okay, it's a quality company. I'm sure they bake this into their guidance. I shouldn't say I'm sure. I'm hoping that they baked it into their guidance. So I'm going to keep that in mind, and I'll catch up with them later today.
Okay. Did you have any thoughts on this tariff announcement last week and how that might affect your sector? If tariffs are deemed illegal, I assume that's going to be good for the healthcare stocks.
I think it was the reciprocal tariffs, right?
Yeah, until we see exactly what gets challenged, what happens. Right now, the tariffs on pharma, they've been essentially excluded, but Trump has said, hey, we're going to do new ones for them. And, it's not good for the industry. So it's been this overhang. Right. Now it's so baked in, Ben's point's a good one, that it's kind of now people are revisiting healthcare and saying, okay, we've had all these worries for a long time. There's not too many other places to go. Let's revisit biotech. Especially with rate cuts on the table and the rest. So, I think it's pretty fully baked in for the fear. I don't know what the reality is going to be. So that's why I'm a little bit hesitant. I still have my little position in Lilly. I have a much, much larger position in Merck, a little position in Novo for large pharma, some Glaxo, some AbbVie. But they're all relatively small positions. In aggregate, they're a decent size exposure. But I don't know. I own some Astellas for international Japanese exposure. And I had mentioned before, I'm trying to find more non-correlated things to buy, like Japanese equities. But Astellas, Astellas is a exporter, so a stronger yen doesn't really help them that much. Some would argue that they're super hedged, and that's not a problem. It does help them, but I wouldn't view that as a yen play.
How's that Japanese basket been working?
So I haven't put it on yet, so I'm still constructing it, and I reached out to a friend of mine at Bernstein yesterday and said, here is my theoretical basket. I want you to go through this and tell me any red flags that I should be aware of, because not being in the local market doesn't,
right.
It gives me a disadvantage. So.
Okay. All right. And then are you gonna publish something on that at some point?
Yeah. I'm going to put it out and let everybody see what it is and kind of how it's doing. And I'm going to track it. So right now it's a little too unwieldy. It's about 30 names, and I want to get it down to more like 15. I think you get the diversification and you get everything.
30's too much. I agree.
Yeah. And so
too much to track, especially for a basket.
Exactly.
So. All right. Anything else you guys want to cover?
I was just looking. Sorry. You know what else I shorted that I don't like anymore, or I never liked, but I shorted again with Circle. I just think that thing's gonna be a donut. Honestly, like it's going back to like $30, $40. Like you don't even have to think about it too much. Next time it rallies, like I shorted yesterday at 132 in the pre-market. I just was looking at it. I was like, maybe I'll cover. It's 117, but then I'm like, I don't know. This thing's just, it's no good. Like the truth is, these banks are going to do yield stable coins. Again, I said last week, we can do stable coins. Like anybody can do a stable coin. Like, they give away 6% on their interest. I don't know. I think this summer we'll look back and all these crypto, treasury, circle. They're just so much what our friend Jeff Mackey calls Christmas tree of death type of stocks. They're just going to go like, I don't know. I think that Circle is not a bad one to short. Now look, it's down 15% in 2 days. So it's just one of those things to keep an eye on it. And when it rallies, maybe not day one, but like day 3 of a rally, feel free to short it again.
All right.
So I have a few things left. There's one is on my calendar next week is the Wainwright conference and meeting with a bunch of companies there, one of which is Zoma, XOMA, which I've talked about previously. They're a royalty company like Royalty Pharma, much smaller than Royalty Pharma. They're a beneficiary of lower rates because they can borrow more money to do more deals. And that's one where I like what they've been doing. So I'll give an update on that. The other is I'm going to send out to subscribers. I don't mind saying it here, but visiting Amneal, AMRX, sometime, I'm not going to give the date out right now, but sometime in the next few weeks. And so any subscribers that are super interested in attending that, I can probably finagle another seat or two. But that's going to be for subscribers, not just for folks that
are for the freeloaders.
Yeah, not for the folks that are getting our free stuff. So, and that's about it. That is about it for me.
Okay.
All I got also.
All right. I was going to mention, Ben, is there any chance that MSTR gets added to the S&P 500?
Yeah, I mean, it's pretty big, so I'm not an
Crazy.
index arb guy, or so like I don't know all the rules of inclusion. So it's a weird one, right? Because
Right.
their underlying business is $60 to $80 million of EBITDA and not growing, maybe even shrinking. And then they have 100 billion plus of market cap. So based on its cap, it really should be in the S&P, right? But then you're kind of like, well, they just own a bunch of Bitcoin. Like, it's a weird, it's kind of like a mutual fund, closed end fund like structure that
I would ask the two of you, and obviously not to denigrate strategy, MicroStrategy, or strategy as they go by now. And I don't want to use the word scam because people will come after us if we say it. Is this a company that you'd invest in? Because look, Jim Chanos is super smart, right? And if anyone doesn't follow Jim Chanos on this stock, like what he's saying, it's really interesting. He berates them almost daily.
He does.
And it's super educational for someone who doesn't follow it closely. But I just want to know, what do you guys think? Like, is that a stock that you would own other than like, hey, I just fear a missing out type of stock? I mean, is it a business? To me, it seems weird. It seems like you're borrowing money to buy something else that you hope is going to go up in value. So you could just buy the thing that you hope to goes up in value. But
I think that there's a 2-pronged shareholder base. I think that the guy, like his insight, and just so you know, like I put a tweet out that got like 2 million views, and I sent his stock down 30% in March of 24. If you want to go to my Twitter highlights page, it's on there. And so I talked all about what's going on there, and I recommended what Jim's doing, which is short MicroStrategy, long Bitcoin. But the one thing about that strategy, I don't know how many word time we can say strategy in a 2-minute period, but it is
that's what he renamed the company.
Your short volatility. So last fall, right, September to November, it had a monster run, and so that was a painful position, being long Bitcoin, short strategy, and so what happened was there was a double levered ETF that came out and got a bunch of flows, and then this is such a weird stock. I wish I had this chart with me. Maybe I'll tweet it out, or I'll send it to the subscriber chat actually later. When the volatility goes up and the implied over realized volatility expands, the premium, that's when the stock works. Because most stocks, they go down when volatility goes up. But this is a stock that works with volatility, because it's like one of these things where the stock goes up, and then the vol goes up, and then the option dealer starts like harvesting it and delta hedging the spot up, and then guys start jamming the calls for speculating, and so it's just kind of a feedback loop, and then it hits its crescendo, or it's at its top at some point, and then goes back, because then what happens is when you get to that top, he issues stock. Because his whole model is putting stock out there when he has a big premium to NAV, right? So that's what you want to do. That's when any financial company, when you are at 3 times book, it's a good time to sell stock, not when it's at 0.5 times book, right? It's like, that's just the difference between Citigroup and JP Morgan, for example. But here's the thing. There's a lot more Bitcoin treasury plays now. And if you're going to be in strategy, I'd be in the preferreds, or like they're getting 10%, and they're going to be funded by at the money equity sales. He just did another 46 million of he's going to treat that like a shipping company treats its equity. And so, they're
insatiable.
Look, shipping companies can work too. It's actually a very good analogy. Shipping companies, when they work, I don't know if you've ever seen one of those, but they really rip. And then they do the Christmas tree move also. So it's like it has that shipping company dynamic. But I think they're smart guys. One of our subscribers is a high yield manager, and he talked to me about it. And he said there's a smart shareholder base in the preferreds, and there's pretty good Bitcoin coverage there. And then the converts, which was his original insight, was like, hey, we can add a little excess convex upside to a bond manager. And like, unlike equities, if you can get an extra 100 bips, extra 50 bips of performance, that's a big, that can put you at the top of the Morningstar list, and be the difference between getting flows, not getting flows into your fund. So guys did pretty well with those converts, and he was just serving the bond market paper, and they didn't have any access to Bitcoin beta. And so now that there's all these things, I would not invest in it, David. Jim, I know Jim, and he's another Wisconsin guy, so follow the Wisconsin guys on this. Little shameless.
Wisconsin guys are short. And I've only ever been short this thing myself. So
yeah, Steve and I top ticked it last November. Remember that?
Yeah,
like 480 something.
It's sort of like, I wonder if you were talking earlier, Ben, about what we'll think about it in a year or two, and will you look back at this as sort of this grinning ape or whatever those NFTs were? Will you just be like, oh wow, when
Bored Ape.
Yeah, when this blew up, I remember, and it's caught a lot of people's attention. Then you see people copying the strategy of, oh, I'm going to become a Bitcoin company, and it just seems to me it's not something that I would short because I don't understand it well enough, and I'm not doing a lot of shorts anymore. But it just seems pretty insane to me. But again, I admittedly don't understand it, so I'm glad that you guys who understand it better wouldn't be involved either.
But you are perpetually short Bloco
and BHC. Those two are, I believe, zeros. And let's revisit that for a second. Carl Icahn left. He not only sold his entire position, but he also the two representatives of Icahn left the board as well. And people said, oh, this is great news because Paulson bought his position and Paulson's smart. And I said on Twitter, to be clear, and I'll say it now, John Paulson, or Paulson & Co., is the worst healthcare investor I have seen in my 20 years of being on the sell side. Okay? He owned Endo.
How's that for an endorsement?
He owned Endo. Mallinckrodt, he owned Valiant, And so his average price is so much higher. So yeah, it's great that he's buying it from a shareholder's perspective. If I'm taking the other side of that trade, I'm like, yeah, at least somebody who's a billionaire is taking it. But look at the rest of the holders list and look at who's been in and out. We've had a bunch of billionaire hedge fund guys. Bill Ackman came in and left. Like, it's unfixable. And if Carl Icahn can't fix a company after being under the hood for a couple of years, say what you want about, Icahn Enterprise and whatever. He is like a singular talent in what he does. He's amazing at what he does. And so I would be really, if I owned it, I'd sell it today. If I would, if you gave me money, if you gave me shares and were like, hey, listen, don't sell these for, I'd find a way to hedge against it. I think that they have too much debt. They have too much debt that they can never pay back. So it's a simple equation.
Is it hard to short?
No. Super easy to short.
Plenty of borrow. Okay.
Yeah. It's just going to take a little while because not that long, but in January of 2008, their big product goes generic. So about a year from now, I mean, obviously
2028.
Yeah, 2028. Obviously the market's already considering this when you look at the stock. This is a stock that, and to be clear, the currently number one ranked pharma analyst, he said that this was going to be a turnaround over and over and over. And he's just been wrong. And so now he doesn't talk about it. But it's $7.50, right? I mean, it's not like this is the market thinks that it's going to do great. So
this is a melting ice cube. It's just going to take time.
That was incredible. That was incredible. The worst healthcare investor on the street of my whole career. That was pretty great, David.
Yeah, no, and to be clear, he's a billionaire, so right, he obviously had that.
He had one great trade. And that shows you only need one really good trade. And honestly, he probably should have just retired. He'd have more money, I bet, if he just retired. So maybe not. Maybe just put in the SPY, but like that had one really good trade, basically, that he stumbled into.
A lot of hedge fund managers, and that's where I'll say like Steve Cohen's, again, singular talent on what he does, where he doesn't make this mistake. A lot of hedge fund managers secretly want to own a Kmart or they want to own a Sears. They want to run something because everyone's told them that they're smart, and being smart at trading stocks must make me great at running a company.
No, it doesn't. Yeah, exactly. That doesn't work like that at all.
In fact, it's the opposite, right? Because when you run a company, you have to be really good at managing people. And a lot of hedge fund managers
are the worst.
I would say
you can't be a dick.
Not even hedge fund managers. Like, it's hard to manage. I'm not a good manager of people. I'm telling you, it's hard. You're kind of off in your own land of thinking, and then you're like, wait, what are you doing? It's two different skill sets, honestly.
Yeah, you can be tough and inspirational, but that's not all that it takes to run a company. And you have to have so much knowledge about the industry and competitors. And so when I see a hedge fund manager say, look, I'm going to get on the board and I'm going to turn this around. If it's an activist who knows what they're doing, like it's very clear on how to turn it around. You have bad governance. You have bad capital allocation. That's fine. That's great, actually. Those are great situations. That's kind of the Icahn expertise of, hey, you do this badly or you don't see where you could be acquired by someone. What's going on here is so complicated that every drug company knows that you would never buy a company where almost all of their EBITDA is coming from one product that goes away in a year and a half or 2-3 years. So to me, it's simple. And having John Paulson buy, if John Paulson bought the house next door, I would probably sell my house because it's probably a bad trade.
Well, all right, let's leave it.
Mic drop there. What were those tickers, David? It's BHC and BLCO, right?
And BLCO gets the benefit, an even bigger benefit. Two things there. One is it's run by a CEO that I think if you look into his background, he just does a lot of bad deals. And it's also one where their number one growth product is a product in the US. It sells for $1,000. It's a prescription product in the US. You can buy it online overseas, delivered to you for $30.
Wow.
And you think the healthcare system is, running so great.
What's wrong with that? Yep. That's not right. All right, let's wrap it up there, boys. Thanks for joining us, everybody. You can follow us on wallstreetbeats.com and at passes.com/wallstreetbeats. And we will be back here tomorrow. See you next time.
Sorry, John Paulson.
That was amazing, David.